A company reports strong quarterly earnings. Revenue is up, profit beats expectations, and the headline looks positive. But before deciding that the business is improving, there is one document every investor should know how to read. The Form 10-Q. A 10-Q is the quarterly report many U.S. public companies file with the Securities and Exchange Commission for the first 3 fiscal quarters of the year. It updates investors between annual 10-K reports. The financial statements are generally unaudited, but the filing includes financial statements, management discussion, controls, and other disclosures. For a beginner, the key is not to read every page from top to bottom. Use a sequence. Start with the income statement. Look at revenue, gross profit if reported, operating income, net income, and earnings per share. Compare the current quarter with the same quarter a year earlier. Do not ask only, did sales rise? Ask whether profit rose at the same rate. If revenue grows 15%, but operating income grows only 2%, costs may be increasing faster than sales. That could indicate margin pressure. A real example comes from Apple's Form 10-Q for the quarter ended June 28, 2025. Apple reported quarterly net sales of about $94.0 billion, up from $85.8 billion a year earlier. That looks strong. But the filing also showed iPad sales down 8%, and wearables, home and accessories, down 9% for the quarter. Over the first 9 months of the fiscal year, Greater China sales were down 4%. The lesson is simple. Headline growth can hide weakness inside individual products or regions. Next, move to the balance sheet. The balance sheet is a snapshot of what the company owns and owes. Focus on cash, receivables, inventory, debt, and current liabilities. The trend matters more than a single number. If receivables rise much faster than revenue, investigate whether customers are taking longer to pay. If inventory rises much faster than sales, ask whether products are accumulating. If debt rises sharply while cash declines, examine why. Third, read the cash flow statement. This is where beginners often find information that changes the story. Net income is an accounting measure. Operating cash flow shows how much cash operations generated during the period. Compare net income with operating cash flow. A gap is not automatically a red flag, because working capital and timing can create legitimate differences. But it is a reason to investigate. Apple provides another useful illustration. For the first 9 months of fiscal 2025, net income increased to about $84.5 billion from $79.0 billion. Yet cash generated by operating activities fell to about $81.8 billion from $91.4 billion. That does not prove a problem. It tells you to examine working capital changes and notes before concluding. Fourth, read management's discussion and analysis, or MD&A. The financial statements tell you what changed. MD&A helps explain why. Look for management's discussion of revenue drivers, margins, demand, pricing, costs, liquidity, and known trends. The SEC describes MD&A as a narrative explanation that helps investors understand financial condition and results through management's perspective. Walmart's 10-Q for the 6 months ended July 31st, 2025 shows why this matters. Net cash from operating activities rose to about $18.4 billion from $16.4 billion. But payments for property and equipment also increased to about $11.4 billion. Walmart's own reconciliation showed free cash flow of about $6.9 billion, up from $5.9 billion. The lesson is to read cash generation together with the investment required to support the business. Fifth, check the footnotes. Footnotes can explain debt, revenue recognition, stock-based compensation, acquisitions, restructuring, taxes, and legal contingencies. Never assume the main tables tell the whole story. Finally, review Part 2. Look for updates to legal proceedings, risk factors, unregistered equity sales, defaults, and other information when applicable. Pay special attention to what is new or changed from the previous filing. So, for a beginner, use this 6-step process: income statement, balance sheet, cash flow statement, MD&A, footnotes, and Part 2 disclosures. The goal is not to memorize every accounting rule. The goal is to identify changes, understand why they happened, and decide what deserves further investigation. For tracking 10-Q filings and other SEC disclosures, visit SEC filing data at secfilingdata.com. And when you want to extend your research into insider activity, use secfilingdata.com as an ultimate source for Form 4 filings and insider transactions.